Hello guys, welcome to another FU Money. Today a live stream special. We have a special guest today, and as I've been posting on Twitter and many other places, we have FiboSwanny with us today for some TA, really expert TA about Fibonacci's and possibly where we might be going. So without further delay, I will just give you guys what you want. And here he is. FiboSwanny is here today. Hello, man.
Morning, afternoon.
Yeah, afternoon in Portugal.
Yeah, afternoon where you are, morning where I'm at.
Yeah, so a bit hard to get you on the stream, and I've been trying to invite you for some time, but finally you got the time, and that's great.
No, I'm happy to be here. Thanks for having me.
Yeah, thank you for coming.
I found a niche in my calendar, and I gave you a ring. So.
Yeah, thanks for that, man.
Hey, no
so this is very informal, as you know. This is a very informal stream here, and I will probably start just by showing some charts, and then you can get in anytime and explain to us about your magic. But before that, just tell us a bit who you are and what you do and where you come from and how did you get to know Bitcoin and, you know, just a bit of your story.
Sure. Yeah, no problem. Actually, prior to college, one of the things that I really wanted to do was actually get into commodities and trade and do those things. Because I grew up outside of Chicago on the Indiana side. And I just remember, watching all those guys and gals in the pits, just trading, different commodities and this kind of thing. So that's where I kind of started to get the like for it. I got a finance degree, and I actually landed a job trading cattle on the futures and options exchange. Well, I got a job down here in Kentucky hedging cattle, and it was the grain market that I started looking at some of these patterns in these markets, and I'm thinking, well, this is kind of interesting, because technical analysis is definitely not taught in college because it's kind of looked at as voodoo and tea leaves and all those kind of things. But I kind of went down the rabbit hole, learned all that, and kind of a sink or swim kind of deal, and I kind of fell in love with it and did that for about 6 or 7 years, traded cattle and grains in a whole bunch of different markets. And that's where I kind of learned TA. Went over to the energy market. I've been at the energy space for almost 17 years now. That's my day job, so that's why I didn't have time. I don't have a lot of time to get on shows and do YouTube channels and all that kind of stuff, because my main job is I'm a head technical analyst at a large energy firm, and I enjoy my job. I love it. But what got me into the crypto space was kind of twofold. One was just the ideological principles of messing with the monetary system. I kind of like that peaceful anarchy type thinking, to where you can kind of disrupt things and kind of mess with the monetary system, really. But it was about 2016 when I started looking at charts for Bitcoin, and I started noticing some of the stuff that I do kind of worked really well in the market, because I think it started to finally get some maturity to it. I know it was really young in the early days, so wasn't a lot of liquidity, wasn't a lot of things going on to where you can get some really true good analysis. So for me, it took about 2016 to kind of get my stuff to work. So I kind of dove in there, and since I've been doing TA for so long, and I've come up with a couple different theories that I run with, and I feel like I want to kind of pay it forward and kind of help others in the TA space and give them tools to build and validate some of their strategies. I'm not a signal shop. I'm more of a educator, kind of a person on your team to give you stuff that kind of helps validate the kind of strategies you want to get into. But I use Fibonacci a lot, and kind of fell in love with it and found a lot of unique ways to use it, use it as a tool to, just help out on your strategies. And it seems to be working pretty well. Nothing's a gold standard, but it's something that I think really works if you apply it right and go from there. So just Just been around for a long time. Enjoy. I mean, I just have a passion for it. That's why I love my day job, because I get to do TA for my main thing is power and gas markets all over Europe. So I got tons and tons of trading. There's a trading desk out in Europe that uses a lot of my stuff for entry and exit points for a lot of their, for a lot of different power markets, gas markets. Here in the States, it's natural gas, crude oil, all that kind of stuff. So I'm pretty busy during the day with all of that, and I enjoy it. And
so you got to know Bitcoin.
I really love crypto too.
So you got to know Bitcoin in 2016?
Correct.
Yeah.
That's when I first got in on my own, yes.
Yeah,
and then I started.
That's about the same time I heard the word Bitcoin for the first time, about the end of 2015 and starting 2016, and then I took me a year to get it. So I started.
I get it.
It took me about a year to get it, so it was the entire year of 2016 basically, and then I got into Bitcoin. I made my first purchase around 2017 by the beginning of the year. So we are about the same time into Bitcoin, I guess.
Yeah, sounds like it.
Yeah.
I mean, I knew about Bitcoin a couple years before that, but unfortunately I didn't get in.
Yeah.
Because it was more along the lines of I was trying to apply my stuff to it and it just wasn't working. So I was thinking, I'll just wait and see if it ever develops into something. And of course, it did. We're here today. So, so I've been kind of helping out in the space for, since 2017, really, where I have a Patreon and I have a Telegram group and those kind of things. But I just started that up within the last year. It was really a couple of years of just kind of helping people get my name out there, because it's not something I do full time, but I'm here to help when I can. And that's why I'm on the show.
Yeah. I got to know you. Well, I got to know Socrates first because of Tone Vase's channel. And then I got to know you through Socrates when I was watching his channel, which, by the way, disappeared. He didn't do anything else in the past few months, but I don't know why. But that's where I got to know him.
He wanted to take a break of social media, put it that way.
Oh, really? but he's still actively trading, right?
I believe so.
Yeah.
As far as I know, yeah.
Yeah, so I watched you on Socrates' show. I really enjoyed the way that you do your analysis. And then I started to follow you on TradingView. And I really think what you do is really different. And, it's very logical. And I really appreciate the way you do your analysis. But let's just start here. Let's see if I don't make any mistakes today. Okay. So, because I usually have only 2 windows, and today I have 3, so I have to really think about the buttons here. Okay.
Hey, no problem. You said it was casual and relaxed. So
yeah, exactly. Okay, so let's go. Let me just refresh this and see where we are. So, I guess Bitcoin just dropped a bit while we were starting the show. So today
I started to see it come down a little bit.
Yeah, so today we are exactly at this point at $61,850. Of course, the rest I don't give a shit really much, but just for you guys to see. So in the past 24 hours, we had $24 billion traded on the spot market for Bitcoin, and the second place only 10 billion. So that's where we stand right now as to Bitcoin's price. Just before that, let me remind you guys, and I hope it's open. Yeah, it's open. So today you guys will get the third number, not right now, but during this stream you will get the third number you need to sum up for tomorrow's live stream to be eligible for the giveaway of $100 in Bitcoin that we do every week on Saturdays. So don't forget, you have to follow the rules, which are, of course, on the notes of this video below. So you just click the link. The rules are there, very simple, and you can be eligible for tomorrow's giveaway. Okay, so let me try to put the charts on here. Okay, that's it. So let's start with the usual beginning, the price to time model. I'm just going to give a few minutes of my own interpretation of the charts right now, and then we will give the floor to FiboSwanny to do his magic and show you guys what's happening in the markets. So right now we have the price to time model, as you guys know, is kind of invalidated because the third point of the pattern was not validated. We are now outside of the square, so we failed to have a top for this bull cycle inside the square as the previous two halvenings and two patterns. Let me just put it back, zoom out so you guys can see. This is the 2013 cycle where we had the exact same number of weekly bars counting from the halvening to the ahead of the halvening, and then we also had 54 bars from the bottom of the bear cycle, 54 bars to the halvening. So I tried to demonstrate here just for FiboSwanny if he's not very if he doesn't know this model that I was trying to do since last year. The second cycle, which was the one that had the top in 2017, also had exactly the same thing. We had 77 bars from the bottom of the bear market to the halvening, and then 77 bars from the halvening to the top. And then I was trying to speculate about this cycle, the 2021 cycle, that this could repeat itself. So we had 74 bars from the bottom of the bear market here in November 2018, December, sorry. And I speculated 74 bars, weekly bars, from the halvening to this point, which would be around the second or third week of October, which we are now getting out of. So this third data point was not validated. However, we continue to, I will continue to look at the price to time model here just to know or understand what will be the error until we find the top and then come back to the bear market. And then I will give you guys the percentage of error that this showed in the third data point. However, I continue to say that the price to time model is very good when it comes to see that this cycle here looks very much more like the 2013 cycle, which we had a local top in the middle of the cycle, and this one looks to be doing the same thing, although this was not a blow-off top like the one in 2013. However, if you look at the RSI, we had one peak, then a retracement to this orange dashed line here, and then we had another peak for the final bottom of 2013, which happened also in December. December is famous for having tops in Bitcoin. So everyone is expecting actually to have also the top of 2021 in December. Let's see if that happens. But so far, the RSI looks very similar. We had a peak around December, January this year, and then we retraced just a bit below the same level as 2013, and we are now going for the second peak on the RSI on the weekly chart. So that's it for the price to time model. I will not take much more time. I will just give my insight here on the weekly chart of Bitcoin. We are now forming with this drop a shooting star candle on the weekly after being rejected here at the MRI sorry, wrong button, at the MRI resistance line, which are the red dots here. This is the tone phase indicator. As you guys know, I'm also saying this so that FiboSwanny knows that I'm using the MRI. And we are now having a shooting star here candle on this week, which doesn't look very good right now. It was much better a few hours ago before the stream, but now we had a big drop again, so let's see where this takes us. But so far we have all the moving averages aligned, and the 20 is above the 50 above the 100, and the 100 above the 200 on the weekly. So it's still a bull market in my opinion, and the MACD looks bullish, the RSI looks bullish, and we are still not in overbought territory on the RSI on the weekly chart. Also, I have my cup and handle here, which I presented to the stream, to the people here, to the audience a few weeks ago, almost 2 weeks ago, that I found this cup and handle very interesting because the handle was exactly 50% of the height of the cup. So that would put us in 74,000 for the next level of this cup and handle. I hope Fibo will also comment on this. I don't know if you, FiboSwanny, if you like these patterns very much, the cup and handle and stuff like that. But if you can comment on that, it will be appreciated also. Okay, and then let me just...
I'll have charts that will complement it.
Yeah. Also my last chart, which I usually show at the end of the analysis, this is my bigger outlook for Bitcoin. This is my Elliott Wave count since December 2018, when we reached the bottom of the bear market around $3,000. Then wave 1 ended here around 14K. After that bear market, then the COVID correction wave 2, the corrective wave 2, which corresponds to the COVID announcement in 2020. Then we had the wave 3 to the previous all-time high of 64,000. Then another corrective wave 4, which took us down to $28.8 thousand. And I believe, this is my opinion, that we are now starting the last and final wave 5 for this cycle, which could go as far as 280, 250, maybe above 200. Who knows? But I guess FiboSwanny will help us today with the Fibo retracements and give us an idea. So the final wave 5, as you guys know already, I've been showing this on the show, is composed of another 5 smaller waves, which I believe we are now on the third one of those final 5 waves of wave 5. So this is just to sum it up what I've been showing on the stream to the audience here. But now let's have FiboSwanny get into this analysis, and man, the floor is yours.
All right.
So cool. If you want to share your screen, I will put you in full screen now if you want, and you can share it on Zoom.
All right, sounds good. Oh, it says I'm disabled. You have to.
Oh, you're disabled. Okay.
Enable me, please.
Where is? Let me see. I'm fairly new to Zoom, so share screen. It says here one participant can share at a time. That's weird.
Oh, maybe because you were sharing. Let me.
I know I was not sharing. This is another input in the video mixer. So let's see who can. Oh, okay. All participants, and okay. Now I guess you can share it.
Yep. All right. Let's see if we get this rocking and rolling here.
Sorry for the mistake there.
Oh, no problem at all. I think I got the right screen. There we go. All right. You should see my screen.
Yep.
All right. Cool.
All good.
Actually, the interesting thing is the Elliott Wave that you were looking at is pretty similar to mine, so that's kind of cool.
So just before you start, sorry, maybe give us an introduction, because some people here on the channel never saw your kind of analysis. So just give us a small introduction on how you know your approach to analysis with Fibonacci's. Yeah,
absolutely. I know, because there's a lot of stuff on here, and people will be like, okay, what am I looking at? First of all, I came up with this theory that I call threshold theory, and it uses the ADX indicator, the RSI indicator, and it also takes into consideration the Fibonacci retracements and extensions that kind of all work together to give us kind of a tool to enter and exit the market. And it can be used as a tool that you can put with your strategy to help validate, when they kind of work together, maybe it gives you a little bit more confidence to get in and out and those kind of things. But it's going to, I can go on forever on how it works, but I'm going to give you the basics here. The first thing I look for, and down here on the RSI, I break the RSI down into 2 different zones, and I got them marked here as in a bear zone and a bull zone. And then there's the numbers on the side are they're best fit lines that I go back historically and do some back testing and use trend lines and Fibonacci retracements and those kind of things to get the best fit line of where I feel the major psychology changes in the market. So right at this point, going from the bear zone into the bull zone, this would be what I call the threshold, where it's jumping from one space to another. And that to me is where the psychology change in the market happens. So to me, I want to measure my Fibonacci levels from the start of the actual threshold. So this vertical line that's on here is where this is a 4-hour chart, and I do most of my trading off the 4-hour because I'm a swing trader, and I also use the daily for a little bit more longer term trades. But in this case, we're looking at the 4-hour. So when the 4-hour candle flipped this back into the bull zone, so it got above this line right here, it became a bullish market. So if you were following this, you would have bought at market right away when that clicks in. So you'd be filled in somewhere in here. It just depends on how quickly you look at it, or if you have, if you're just in front of it and getting things done. But the first one is always a market buy. So you'd be long the market at this point. And then I also take into consideration the ADX, and I measure that of where to start the Fibonacci lines. And I don't want to go into too much detail because it get kind of too much going on. But the zones are first, and then I measure this of where the threshold should be. And then at the bottom of this candle is where I start the Fibonacci level. So the interesting thing is most people are going to start at absolute lows, absolute highs, which is fine, and that's good for other analysis. But I start mine here, which is probably a weird spot for people to start a fib. But that's, to me, is I want to look at proportion of everything that's happening in the market. I'm not really concerned about price. I want to know the proportion of what's happening against that price. So my psychology change starts here. So what I do is, if you first get into the market long here, what I'll do is I'll just say we started down here, and this is the fibs that I'm moving here. So you start at the bottom and you move it up to the top of this next high, and just say we're right here at this point. So you're long the market and it's worked its way up. A couple of other things I'll look at for targets is the fib extensions. So the high here down to the low, these extensions pop up to the 127 to 141% zone, and that's the key zone that I'm looking at, is that first target to basically trim the long and take profit. So what I will do is, every time the market moves higher, I'm going to keep continuing to move the fibs up. So once this went up to this high right here, and then it dips down into this 38.2% level, I call that the shallow fib. And that's what I have it titled up here, but it'll move up as the price moves up. But right now the shallow fib was at 47.070, and it dropped down there. So you would actually buy again on the dip to the 38.2. So you'd be long here, and you would add your long here, and then you would continue forward. So as the price goes up here and makes a high here, as you can see, it doesn't retrace back all the way to the 38.2%. So there's no additional buy. And unfortunately, it's actually fortunate that we're on a nice bullish run. So every time it makes a new high here, it's failing to get to the 38.2. So you would have two tranches of being long on the open here, and then on the retracement here. So your average would be about in this area right in here. So probably right around, probably just on a guessing point, if you did this, probably, let's just say 47. We'll just be at 47 and working our way up. This zone in here is where the first sell would be. So I actually had an order in at I believe 58.2 or something like that. I can't remember exactly what it was. I think I missed it on this one, and it actually, when it came down to the moving average here and popped back up, it actually filled me on this next move to the upside. So that first buy that I had, I took profit at that high, or somewhere right around in here. And then of course I'm still long the rest. So what you do is you kind of keep following up. And what I watch is this 127 to 141 range. As you can see, it kind of tested it here, came back down, tested the bottom, came back up. And then once it settles 3 consecutive candles above the 141, the 200 becomes my next target for the next leg to take profit. So as we're moving up, it actually dipped down here, but didn't get close to the shallow fib again. And then we're here on this high, and we're currently testing the moving average. The shallow fib right now is around 58. but the 66.2 target at 200% was hit. So you would have taken profit off of the, the second buy. So, and actually you'd be flat at this moment, looking for a correction to buy back into the market. Now there's two ways to do this. The main way is to wait for the shallow fib and buy at this point. But then also when you're testing a moving average and you're also testing the bottom of the bull zone. So in other words, if this market pushes through this moving average, this will bust back down into the bear zone and give us a little bit more of a bearish look. But of course you have to wait for the 4-hour candle to settle. We got another hour and a half, but it's right on the edge here. So if you want to be somewhat aggressive, this might be a spot to buy to continue to the upside. Or if this breaks down into the bear zone, maybe we move down into this next moving average and this shallow fib at 58, and that might be the next spot to look to buy. So all together, I'm measuring where I think the psychology change is, and then I'm working my way up and figuring out when the trend's going to end, and then the trend for me changes when it pops back down into the bear zone, and then we go from there. So the next thing I'm looking for on this 4-hour is 3 consecutive settles above the 66.2. If we get that, this green zone up here becomes our next play, where 79.6 is the 300%. And if you go back, the green that I'm getting from back here was the extension off the previous high. So when you're looking at 74.7 to 79.8, this zone would be the next area to look for, because we made a new high above this one. So this actually comes into play now.
That's actually the target for the cup and handle.
Okay, cool. I like when that works together.
Yeah.
So I highlighted it across here so you can see the highlighted zone. So what I look for is confluence between the near-term extension and some of the long-term extensions. So because a lot of people say, well, where would you sell inside this zone? I would actually sell close to the 300% or the top of the zone. So I'd probably put an order in around 79.6, just below it, to be that next level to sell. Of course, I'm waiting for a buy. If I buy here, then the next sell would be up this point, or if we break down further, and then get into that next buy, and that target would come into play, but only if we get 3 consecutive settles above 66.2. We did make a high, but it didn't get 3 times above it because it started to correct. So kind of in a little bit of a correction mode. But the thing is that as we're starting to move down here, the momentum for the bears is not really building. The ADX is what measures, this black line is the ADX indicator, which measures the trend strength. So as price is coming down, the actual momentum trend is actually dropping also. So the bears really aren't building a lot of momentum on the drop to the downside, which gives us a little bit of incentive to look at this moving average and look at the bottom of this zone as support as a possible buy. So that's something to look at going forward. So that's the 4-hour.
Being a bit aggressive, would you say that in the 4-hour chart, that move from the top, from the 67,000, could be an Elliott Wave ABC correction to the point where we are exactly now?
Are you talking about this move here as an ABC? Yeah, it could be an ABC zigzag down to this point, but it's hard to tell because it's kind of early. But if we get a hold here, then it's just going to be probably a continuation of some other time frames. So like if you look at the daily, this down here on the shallow fib at this level, it's right around 58 also. So to me, I wouldn't be surprised if it dipped down into this 58 level, and then go from there. That would make sense to me. But another interesting thing, and I don't want to get too in depth with my theory here, but if this actually broke down at this point, some of the rules of the method is, just say it broke down and went into the bear zone right here. The first thing I look for is the break into the RSI, and then you also have to settle 3 consecutive settles below the shallow fib. So if this goes into the bear zone, it's just more of a correction to the shallow fib. So if it gets into the bear zone and closes 3 times underneath 58, then that's when we would actually break down a lot further and get a much larger correction. Or if it breaks down into the bear zone, it's more of a consolidation to where it's going to finish off the correction and then work its way to the upside. So we could kind of work our way down, maybe consolidate for a little bit and then pop. But of course that hasn't happened yet. So I'm just kind of guessing what was happening. But for now, we're still in the bull zone, right on support, and an hour and a half to go on the 4 hour. So given that, let's pop over to, I got different time frames that we can look at. So what's going on in and what to look for. Same kind of thing. I got bull and bear zones on every time frame, on on a whole bunch of different coins and all the different things to know where we are, trend wise. So it popped up into the bull zone right here, and got a little crossover of the directional index lines. ADX starting to climb, get some bullishness. But if you were following this, you would have been buying down in this level, probably on that open right around here. So you'd probably be right around 47. If you were using the daily, I use the 4 hour, but it'd be about the same. And the same kind of deal would be following this up, up. And so far it's at an angle where it's not really retracing all the way to the shallow fib to rebuy. But actually this is probably where it could and get down to that moving average and then buy and go forward. A couple other things is the red here shows the extensions of targets. That's where that 66.2 came into play that you saw on the 4 hour over here. So I use the 4 hour more, but the trend line break objective line is right there, which is just inside this next zone. So if you're trading off the daily and you bought down here, you don't sell the daily until it gets up to around 72, and that would be your sell. Or if this comes down and breaks back down into the bear zone, then you sell it. But it's a ways from there, and it's definitely still got some good momentum going. So to me, this is just a bearish correction in an overall bullish market. So really same kind of thing here on the daily, just looking at different charts here. If you get 3 settles above 72.3 off of this extension, 90.3 would be your target. So it's just kind of, I use these Fibonacci extensions for trimming. And then if the market wants to continue trend, I use what I call filtering. And when I say 3 consecutive settles, whatever time frame you're looking at on the daily, if you got 3 consecutive daily settles above 72.3, then 90.3 comes your target, and so on. So, but most of the time, if it gets up to this point and you sell it and it holds and then it starts to drop, then you get the correction. You get to buy it a little bit lower and grab that opportunity. Flipping over to the weekly. This is kind of where your cup and handle that you were kind of talking about is in this pattern right here. What I'm looking at, for one, we were in the bull zone and we barely stayed in the bull zone, which was interesting when we were testing down here. But when you see the Fibonacci line that I broke into the bull zone right here, this is the start of my Fibonacci line, and then you go up to the high, and the 61.8% level was right there. So it really held. It tried to wick down right here. But I would have to wait for 3 consecutive settles to make that break, and it never did. So it actually held the bull zone right here to keep us going. And I drew this trend line in here just to kind of show a direction for support. So what I'm looking at here is this was the first target off the weekly. So if you're going off the weekly, you would have been buying down here first. And of course the same kind of deal. You can work your way up here as it actually this was a high first. You could have bought more there. If it went up to here, you could have bought more at the 38.2% level here, and then work your way up to this point. You would have bought more on this dip to the 38.2, and then work your way up to the top here, and then up all the way up to the high here, and then it actually broke the 38.2%, but it stayed in the bull zone, so it actually went all the way down to the 61.8% level and held, and now it's working to the upside. Now that we made a new high, what I'm looking at here is these are I took the extension off the previous 20,000 high down to the 3,100 low, and then I showed the Fibonacci levels on basically kind of a parabolic move type way to look at it, the 200, the 300, the 500, the 800. And then I took a trend based extension off of this move down to the low. And then I also did the extensions off of this. And where these kind of match up is basically my sell zones. And right now we sold in this zone already. It dipped down, and you probably would have been buying back around in here, but it went all the way down here. If you got gutsy, you probably bought some more, and then worked your way up to the upside. So what I'm looking for now is 3 weekly settles above 57.5. So on this weekly, and we already had one, and hopefully we get the second one. So the end of next week, if we're still above the 57.5, then the 89 or 86 to 89 level comes into play as your next target. And that's kind of the area that I thought we would probably see by December. And I have a December 27th as a possible high, and I'll show you where I get that number from. And then, of course, if it gets really parabolic, the next level is up there at 137 to 143. And of course, if you keep this as your support guide on this trend line, you can kind of keep bouncing off of this and keep going if you want to. But then once you break this on a weekly basis, probably going to be in tune for a much larger correction. But I'm watching this because if you look over here, it never settled 3 consecutive days or weeks above this line. It did and went back down. It did and went back down. But so far we're one above it. And I like that we made the new high. So it probably would bring some more support in here and work our way to the upside. So everything's looking good there on the weekly. Flipping over to the monthly. This is something I've been looking at for a long time. Basically these are timing of lows. On the monthly, so the low there and the low, and then you work on a cycle to another low, and then you work to a cycle on another low, which was beautiful because this June low, with a lot of other stuff I had, this June low, I actually called that June low like 10 months prior on a lot of different timing.
Man, that's
that I look at.
That was exact to perfection.
Yeah, it was crazy. I was jumping for joy, believe it. So it was working really well. So now, if you take this and go to the next one, your next major low is not till September of 22, and who knows where that low could be, but we'll have to kind of continue to follow that. But the other side of this is following where the high is going to be, and I'll show you on a timing. I got a December high timing, and it's from a different chart, but December 27th is kind of the area that I'm looking at, but this is a monthly, so we're looking at December. I just put a little sine wave in here. Just as like a little guide. So you went from a low to a high, and then you kind of continue to where it kind of went into some consolidation and consolidated again, and then it dipped, and then when it come up to this point, it was at a low, dipped down, kind of following it. It was at a high right here on this point, and then you flip down here to a low, and then again you're in consolidation. And then it popped up. And at this point right here, it actually broke to a new high off of this line. So if you continue this down, you got this point right here, and then you got this point where we're at. So right at this point is where that June low should have hit, and it did, which is nice. And then if you kind of whip this out
believe it or not, I actually bought that dip at 28,000. That was amazing.
Yeah, no, I did too, because it was based off my daily. When the daily broke at a certain time, it was like it worked really well from the bull and bear zone. So good job buying that, because it was probably scary when you were doing it. I was shitting myself, man. Exactly. So now what I'm looking at is if you take this sine wave, you're down at this point where we're consolidated and then we're popping higher. So the December high timing would be that next sine wave, which puts us in December. And if you just look at the fib extension off the high here to the low, the 74.7 and the 79.8, and I think that's where you said the cup and handle might be. So that's that probable breakout zone. So that would be almost like a bare minimum, I would think, that we could get to as a high in December. But really, I think we probably have more of a chance of getting up toward the 89 and maybe even higher. It just depends on how things work out.
Well, historically,
right now,
all the tops occurred in December so far.
Yeah, pretty much. Yeah, I think I got something on that. Let me look it up here. Yeah, like at this, a couple of things. If you look at this one here, this is just a weekly that I've been following, looking really at this main point off of this modified shift pattern, fork pattern that I've been looking at. If you look at it from the high, to the next high, it was 1,477 days. And then if you took 1,477 days, it's December 27th. So I'm just kind of using that as a guide. And right now we made this new high right here, but this resistance at this yellow line is basically right around where we hit at this point in time. So next week it'll probably be about 68, and then it kind of works up to about 72, to where we can try to break through this point and kind of keep us in this, kind of put these, like, you know, just to show you where the support is on the way up. And then you got up to this point, and then it broke this parabolic type move right here. And then once it broke this line, then we started correcting. So right now, if you look at where we are on this one, we're still above it and could work our way to the upside. Now, if this works as the parabolic the way it should, I mean, it could, December 27th and where this actually, you know, kind of crosses over, you're looking at like in the 120s. And then maybe a breakdown, or we just get up to this point right in here and then maybe it breaks. So I'm kind of following this as right now we're at major resistance, but if this breaks, that's where I think a lot of buy stops, a lot of new people, FOMO, a whole bunch of stuff could happen if we break this midpoint and start working our way to the upside. And that opens up, you know, the 80 to 120 level or range. So kind of gets where the December 27th kind of came into play. I'm not going to go through all of this, but there's a lot of different timings that I had here. Basically, I put some from the halving to the high post halving, and I started a fib timing on that. That's what the red lines here, 0, 1, 2, 3, 5, and 8, matched up really well. Another thing I did was the halving to the high. I did that timing, and then I kept that going out further. A couple interesting things. There was a trend line break right at that point. There was kind of an inflection point right here. And then if you go out to where this all matches up, because the other one I have is the green one, which is the high post halving to the next high post halving. So when these match up on a timing, that's when we hit the high on this Fibonacci timing for the 5. And then if you keep going through if you keep the cycles going for the different things you're looking at, it matches up again in that December time frame right in here. And that's where that December 27th kind of comes into play as where that high post halving should be. We had the halving here and then made a new high post halving, came back down and tested that as support. And now we're working our way up to that high post halving. So hopefully it gets up to, I got a minimum of 85, I guess, but I could see it going well above 100 if it gets really rocking and rolling. So I've been kind of using this as a timing thing. I had a high to a trend line break because there was a trend here. So, and that's right where it broke. And then, and if you take this blue out this way and kind of keep going and keep going and keep going, the high to trend line break actually broke on this trend line also right at that same point. So if you kind of keep looking out this way and you look at this, you could put another, I don't have it on here, but you draw the trend line out here, and maybe it's, maybe we break that trend line in February or somewhere right around in there of where this timing goes. So I look at different cycles, different timings, bring some fib timing into it. It's just interesting that the fib timing, the 2, 3, and then the 5 was interesting, and the 8 was an inflection point where we made a new high. The 13's probably way the hell out here, but it all matches up really nice in January 26th. So maybe we'll be at 400,000 or something by then. But right now, that's kind of the timing issue that I'm looking at when it comes to Bitcoin. Your Elliott Wave, I got mine numbered a little different, but the whole general principle looks the same. I started way back. I've been following this for a long time. As I don't trade off of Elliott Wave. I use Elliott Wave as a verifier, or basically a guide to give me an idea where things could be. And
actually, you have exactly the same numbers as I do. I also started my wave on where you have number 1, the black one, and then it went up with the first wave to the blue one. Yeah, so I mean your blue wave is exactly like mine.
Blue wave. Oh, you mean the primary wave?
Yeah. The primary wave is exactly like mine.
Yeah. That's what I'm saying. Like, but the interior might be like numbered a little different. But yeah, I think the whole general principle is looking good. But here's what I had broke down, and this is kind of where we're at the moment. I got the primary wave 3 was up here. which was the end of a wave 5, kind of a pattern here to an end to a 5. I had a WXY here, which was a W, and then I had a WXY here, which was an X, and then I had a WXY here, which was a Y. Just kind of a weird correction pattern. I went through this many times to try to find where that would be, but I looked at a whole bunch of different fib, different time frames, different things like that, and it really worked out well to be this is the stop of it. And this is when I was telling my Patreon group, this is where we should buy, because I think we're on the next mode of wave to the upside. And one of the reasons for that is the end of this is the primary wave 4 here, that blue 4. And one thing in Elliott Wave is if it matches up with one lesser degree. So like right now, this is a primary wave 3, but this is a wave 4 within this wave 3. So it's of one lesser degree. So if it's a primary, it goes to like a minor wave, or I can't remember exact words, but so when the 4 matches up when the primary 4 matches up with the one of lesser degree, that's a pretty good sign for support. And then we got into the 1, 2, 3, 4, 5. So I got a 1 here, got an ABC with a 2. And right now I think we're on a 3. And the 3 might be done. And then we're correcting to a 4, but this 3 could be extended. So we'll have to see if we hold support here and it just continues higher.
Yeah, my 3 is a bit bigger, because your 3 right now is smaller than the 1. If you consider your wave 1, that one that is just next to a 5, right?
Yeah. I don't think this is done. I think it's up here.
Yeah, exactly. So I also think wave 3 is around maybe 75, something like that, 80.
Yeah, I haven't updated this
which
yet,
would be just in line with the cup and handle, by the way.
Yeah. Oh, that's cool. The one thing I haven't done yet is I'm looking at this as a kind of extended here. So it's a 1, 2. This is 3 and a 4, and then the 5 up here.
Yeah, exactly.
Yeah. That I just didn't have it updated. But that's where I'm kind of looking, and then the 4. Can't be any lower than wave 1. So if it wanted to correct all the way back, it would correct back to around 53 on that. So, what I would do is I would take like some fib things off of this latest wave here, and it's say where it, depends on where it goes. But like one thing I like doing too is if I move this up and then I take the 61.8% level and match it right where this is right here, the 1 and 4 right here. This can kind of give you a target of where that could go, and that's right around 75. So it's not there yet, but I would think like if it got up to that 75, that's where wave 5 would be, and then wave 3 would be right here. So I don't know if that matches the cup and handle, but that's about where the fibs tell you where to go.
It matches perfectly. Let me just put it here for you guys to see. Where is my, okay, here. So, sorry, not this one, this one. So the cup and handle gives us 74,000 target, almost 75. Yeah.
Okay, cool. So the way I would look at this is, if it holds up in this area and comes back down and tests, then you got that 5th wave to the upside. Does it hit the December high? Maybe it gets up to 100K or whatever. But that's kind of the pattern I'm looking at, but I don't trade off of this, but I look at it as a guide. So if this is still holding true, and it doesn't break down, then this motive wave could still work to the upside, which helps me look at places like in here to possibly buy, or to buy on these dips. Because if you get this dip down to 58 on the 4 hour, and you're looking at where'd it go? And you're looking at the 58 would be in the middle down in here. So of course you can't go below this one. You can't go below 53 or it's wrong. So we have to kind of watch that. But another thing is the 1, 2, 3, 4 that's happening right in here. Depending on when this little 4 happens, and then we get the 5. Like I said before, the wherever this 4 ends, and just say it ends here, just for kicks and giggles. If it ends here and it goes up to some of our targets up here, this wave 4 would be the higher one, and this is one of lesser degree. So the correction would be around that same spot, just like it did back here. So that's what I'm kind of looking at. And then you'd have the fifth wave to the upside. So kind of using that as a guide to see where things can go there. Other than that, that's really all I had for Bitcoin at the moment. I know there's so much I went through, so somebody might have to go back and watch the video and kind of and if you do go back and watch things and you have questions, just
if you want to give us
Twitter.
a hint, I see you have Ethereum there. If you want to go through Ethereum, I don't mind.
yeah, that's no problem. Yeah, I thought maybe, I didn't know if your audience had a lot with Ethereum, but that's another one that right now I own Bitcoin and Ethereum.
I also have a few bags of Ethereum I want to dump. So,
but yeah, if you look at the my system here that I use, we went into a bull zone right here. So you would have bought right in here, and same kind of technique. When you start to the upside and you get to this point, I actually sold at I think it was at 39.90, but I didn't do it until it got up to this candle is where I actually sold, because I had a target at 39.90, I think it was, but the thing is I bought here and then went up and it came down to the 38.2, and I bought again at that 37.90ish area. I know it wicked down, came back up, and kind of consolidated in here, but I bought again at the 30 at the shallow fib, so then it made me more long, and then I got up to this point right here. I actually sold at the 39.90 right in here. So that first one I bought. So the second one I bought, I actually have a target much higher, but I actually bought more on the shallow fib when it hit this time. So I have one bought back here and I have one bought here. So I have an average of, somewhere where it's still somewhat safe. But as this works down here, you're going to get close to this moving average. We're still in the bull zone. So right now, this looks like a correction in an overall bullish market. So this dip down into this area should be a buy. I actually buy at the shallow fib because I just stick to plan. I don't try to pick bottoms or anything like that. So I just go ahead and buy when the shallow fib hits. I actually set limit orders pretty close to what the shallow fib is, so I can get that filled. And then right now, since I'm filled there, I don't really need to buy anymore. Because the interesting thing is like when this came into a bull zone back here, I bought here. It actually dipped down pretty quick, but it never broke back down into the bear zone. So this whole move right here wasn't really anything, because it didn't bust out of the bull zone down here. So I had to buy here, and then it worked its way up. If you worked your way up with the fibs like we did just here, you actually had a couple more buys in here. And then when it went into the bear zone, it just went into a consolidation. And like I said before, when we went into a bear zone, one of the things you have to do is you have to settle 3 times below the previous 38.2. And in this case, it never did. So all the buys I had back here were still in effect. So I kept those. And then once we got to the 100%, I sold one of them. But then a couple of the other buys I had in here, I continued to the upside. So I actually still have some more Ethereum long. So if you would have followed this system, you would have done really well, popping up here. Never sold here because it never broke back down into. It broke into the bear zone, but barely, and it never got below this 38.2. So you would have held on to your longs, and then once this kicked in, you would have pressed it and got even more. So far, this is working out pretty well. But right now, the shallow fibs my buy, still in the bull zone. So once this gets into the bear zone, then that's when I would actually sell everything. Because right now, the 38.2% levels right here, if it breaks down into the bear zone and it settles 3 times below this, then I get out of all my longs, take my profit, and wait for a larger correction. And then what we'll do is when it pops back down to the bear zone, you can either go short if you want to do it the opposite way, or I'm pretty conservative, so I'll wait until it goes back down or pops back up into the bull zone, and that's when I'll buy again going forward. But for now, it's in the bull zone. It's correcting. Looks like we can pop up to the upside. And then my next target is that since we had 3 settles above 4,100 here, we had 3 consecutive settles here on the 4 hour. The 4,700 is my next target. So I'm not going to sell anymore until it gets up there, or if it breaks into the bear zone, that's when I would sell. But right now I got a 4,700 target that's I'm kind of holding out for.
I
Yeah.
usually get a question from the audience a lot, which is, so if you buy when you get into the bull zone, in your case, I'm now applying to your strategy. Where do I put the stop losses? Or aren't you a big fan of stop losses, or are you? Or how? What's your strategy for a stop loss for the spot market, for example, versus the leveraged market? I don't know if you do leverage, but if you want to also talk about the difference between the two.
Yeah, I used to do leverage, but that's for a young guy. That's for young people because I can't take it on my heart. I'm getting too old for that. I would, don't get me wrong, every once in a while I'll leverage on something, but when I do my system, it's all spot market. I don't really do leverage that much. I'm pretty conservative, getting into my older age. Not that I'm super old, but
I also stopped leverage, man.
Yeah, I generally do spot. The thing is with my system, if you've never used it before, of course, you're not going to trust it until you start looking at it for a while. But I've been doing this for a long time, so I kind of trust my system. My stop loss is if I bought right in here on this threshold at this point, and I bought, my stop is not until it goes into the bear zone. So I will take risk because if this thing starts to pop down, it's sort of like right here. If you would have bought here, I know it's going against your wallet here. So if you would have bought and it's going down here, I would have sold if it would have got into the bear zone and I would have taken a loss. But in this case, it rescued me and went to the upside. But generally, my stop loss for my system is not until it breaks back down into the bear zone, and then I get out. So in this case over here, it didn't even come back down for a while. But just say if it would have dropped down into here into the bear zone, that would have been out. So when I first get in, I know it's risky, but I stick to my system, and sometimes you lose, but the majority of the time, in the long run, it works out. When you back test it, it works out pretty well.
So you would say that your stop loss is much more zone based than price structure based?
When it comes to using my threshold theory, yes, correct. I mean, of course, other times when I'm doing different things that's not using this system, then of course stop losses are going to come into play for different things, especially if you're doing all coins and things are less liquid. And of course, you're going to want to protect yourself against craziness. But generally, if you do this method with the spot market, you're really not taking a ton of risk. I mean, of course, everything's risk, but
it's a bit higher, right? It's a bit higher risk than just using the price structure stop loss kind of strategy, right?
It is. But I mean, you go into stop loss for many different reasons. It's going to be based on how your strategy set up, your risk tolerance, all those kind of things. I don't risk much more than almost 1 or 2%, of pretty standard per trade. So when I get in, I buy in buckets. I got a pocket of dry powder basically for every bucket that I buy. So say there's a BTC bucket. Say you got $50,000 sitting in a BTC bucket. And if it pops into the bull zone, I'll buy 10% of that bucket. So basically you would buy 10%. So you'd risk, it's kind of hard to explain, but when you look at it from an overall portfolio versus how much you're buying at that point, it comes out to be around 1 or 2% based on your overall portfolio. But I usually buy 10% tranches. So if it goes in, I'll buy 10% of whatever that bucket is. So if you got a $100,000 bucket, you're buying 10%. Excuse me. And then the next time it goes down to the shallow fib, I'll buy another 10%. And then if it gets down to another shallow fib, I'll buy another 10%. And then I also sell 10% at the targets going out. So everything kind of goes in a 10% tranche. So I'll buy 10, add 10, sell 10, add 10, and just kind of continue the trend, because it's all trend based. So, and I want to measure where that psychology changes in the market so I can get in when the mindset and the sentiment of the market is changing and working to the upside or to the downside if you want to short it. But I would say 90% of the time I'm doing the long side of things. Every once in a while I'll short.
So when you say 10%,
a daily bear zone, has to be in effect for me to short.
So when you say 10%, you mean 10% of your entire portfolio, the money you have to invest, right?
No, it's 10% of whatever money I have in that bucket for whatever coin I'm in. Because I set money aside for whatever coin I'm looking at. So like Bitcoin, I might have a certain amount. And then Ethereum, I might have a certain amount.
Okay.
So whatever amount I have in that bucket, I'm buying 10% of that money. But when you look at it from, like, if you took all of it as an overall portfolio, it's under 2%. Overall per trade. Do you understand? Does that kind of make sense?
Yeah.
It's just the way I do it.
It's very similar. Science. It's very similar to my own strategy. Yeah. I also only invest in tranches of 10%. But as I usually, my big investment is always Bitcoin. I also have a few bags of Ethereum because I was a miner for many years. I started to mine Ethereum also in 2017. Although I stopped this year, I just stopped in February. I sold my entire mining operation to invest even more in Bitcoin. But it's usually my strategy. I also invest like tranches of 10% of what I have already invested into that specific coin, which in my case is mostly Bitcoin. So,
yeah. And to make things even more confusing, on the daily chart, I have a long-term hold. It's not cold storage. Cold storage for long-term, 10-year hold or 20-year hold or whatever is completely different. But from a trading standpoint, I have my short-term looks that I trade off the 4-hour. And then if I trade off the daily, then I have, that's a different bucket. And that bucket's a much larger amount because the profit that I make from the short-term trades goes into my longer-term trades. So my 10% buy on a daily is going to be much larger 10% than the shallow 10% or the smaller 10% on the 4-hour. So to make things even more confusing, but it's just the way I run my books. So it's just the way I do things. So right now on the daily, I have a much larger position on the daily chart than I do on the 4-hour, because I want to follow that longer term trend. And I usually don't trade very much on that one because it's much larger targets. So like right now on the daily, my target on the daily to sell is the next one's not until basically around 72 would be my next one.
So when you say sell, you would say those 10% which you would take profit, yes. Right?
Yep. And right now I have 20% on my long term that I have left from if you followed the whole system. I still have 20% left. So my next one will be there, and then of course I'll probably hold out probably for maybe 79.6 or even higher, just depending on how things are going. And just kind of follow it. But then if it drops down to the shallow fib and I buy more, then I'll be back at 30% if I don't sell anything by then. But hopefully it gets up into this range, then I sell 10%, and then I'll have 10% left to go to the upside. But right now on the 4-hour, I don't have anything. I'm actually flat on my short-term trade, and I'm waiting for a move back down to the shallow fib to rebuy on that one. So it just makes it even more confusing. But I trade mostly off the 4-hour. The daily is just the few and far between on the trades. It doesn't. There's not a lot of trades that go on the daily because it's just a much slower moving time frame. So profits from the 4-hour go to the long term, and hopefully if I get a lot of profits off the long term, it goes into cold storage for retirement. Put it that way.
Exactly like me. I also have the cold storage. The cold storage with my big position, my bigger position of Bitcoin, which I started to buy in 2017, of course, much cheaper than now. And I use like 10% of my entire investment X. So the X is the number to trade, swing trade also, just like you. Can I ask you something? I know that whenever you have to go, you just tell me that you have to go, and then we'll wrap up. But
I got about another. I go about another 15 minutes if we're good.
Yeah. Okay, that's cool. Just one question. So also people on the chat, if you wanna to ask any questions, just mention the channel name so I can see the orange rectangle around it and ask your questions. But I'm just going to ask one myself. So based on your strategy and Elliott Wave's subjective confirmations, as I like to call it, I use Elliott Waves mostly as a subjective confirmation of what I see on the charts. So
we seem pretty similar.
Yeah. So what's your prediction for a cycle top, for example, based on your strategy? I'm not so much talking about when this could occur, because you already said, yeah, it could be around the 27th of December, probably even a few weeks later.
That's just a timing guide.
Yeah, but price-wise, where would you put the top right now?
I think the cycle top for me is going to be around this level right in here. So I'm going to say in the 120s is going to be my cycle top for this one.
Okay.
Is my guess.
So that would confirm the wave 5 for the longer wave 5 that we have around the same levels. Yeah.
Yeah, and it would have to be an extended wave to get to that point. But yeah, I think that could be the best case scenario. So in other words, like, I'm not in the camp that we're just going to hit 100,000 and drop. I think it's going to go much further than that if we get up there to test it. Of course, there's going to be, resistance there. Everybody, it's just a psychological round number. So everybody and their brother is going to be thinking that, resistance there. But I don't think if this thing cranks up to 100,000 over the next couple of months, that I think once you get past 100,000, I think you can see $5,000, $10,000 candles pretty easily. But again, when you get up to that level, the percentage change is not that much compared to when it was at $100. You know what I mean? So once you get up to 100,000, a $5,000 candle, even a $20,000 candle could happen pretty easily once it breaks that point. So to me, I like that 120 to 130 range, somewhere in the 120s is where I think the cycle top could be. And then, just kind of like on the timing I'm looking right here, it gets up to this cycle top on this trend line. And then once it breaks down, then you got that much larger correction. Same kind of thing here is if you keep following this guide, this point right here is right around the 120s when it matches this next, what do you call it, fork line here of resistance. Or if it continues even higher, then you're talking 178. And if it wants to go all the way up to the top here, you're talking like 300s, but that's getting kind of crazy, but never know. But right now I like this zone right up in here as the possible extended wave 5 up into the 120s.
Okay, we have a question. We have actually a good question, which I wanted to ask you before and I forgot. So the question is on screen for everyone to see. What are the rules on how you place the more or less 45-55 line in the RSI? I mean, I guess he wants to know, how do you define your bull zones and bear zones on RSI levels?
Yeah, that's much tougher. That's something that I kind of build with my Patreon group. I had a webinar that kind of explains it, because it's not just this easy thing that you just go draw lines. You have to kind of go back historically, and you're trying to find the best fit line. So in other words, if you go back, couple of years and just kind of look back at, it's involved. It's not something I could tell that I can really tell here. In the webinar, I give people the idea, kind of show a simple way to start, but it's weird because to build the bull and bear zones, it's just an experience thing that once you start looking back, you can start seeing where those changes are. So, a lot of times I'm looking at, you can draw a whole bunch of different trend lines all over the place, and you got to find where the most times that psychological change happens based on trend line breaks, based on Fibonacci extension breaks. It's a whole process. So it's nothing that we can talk about here. That's kind of the bread and butter of the entire thing. So if you don't have the right bull or bear zone, it doesn't work. I've had people ask me, well, a lot of times your numbers are pretty close to 40 and 60. Does that work? And you can do that, but when you look back and you back test it, it doesn't work that well. For some reason, I don't know why. I mean, but if you actually back test and find those psychological changes based on the indicator, it's very interesting on how those levels work going forward, because price is going all over the place, and all of a sudden you're back down at a support level on a bull zone that is holding months later. It's weird, but to me, it's a measurement of psychology. I mean, really, that's what it is. There's fear and greed in the market, and as long as that people have that fear and greed, they're consciously and unconsciously going to make patterns. That's just what I found over the years that I've been doing this, and that's when I kind of kept trying to find a decent pattern that I can use indicators to determine the psychological change.
And that's absolutely right, because the markets are made of people. Many times people address the markets like something subjective, but markets are made of people, and people work like in psychological patterns. So that's absolutely right.
Yeah, and for some reason, the zones that I have found work really well on those psychological changes. It's just something that it took me. This isn't something that I just came up with overnight. Given that I'm a TA guy on my day job, I get to look at charts all day, so I get to learn so much of what's going on in the markets, and that's what kind of helped me determine this way of doing things.
Also, since you mentioned it, you have webinars and stuff like that. So I didn't have the chance to ask you for the links that we should put in the video notes below the video. So as soon as you can, after this stream, of course, I would ask you to send me on Telegram, all the links to the, stuff that you do and that people can watch or join the webinars, I don't know. And then for everyone else watching, I will drop these links on the video notes so that you guys can check it out. Okay. So as soon as the stream ends, I will, and when I get the links from FiboSwanny, I will put them in the video notes, and then you guys can check. Okay. So let's see if we have any more questions here. Oh, someone is asking if you could explain it a bit better, the 10% strategy that you explained earlier.
Yeah, I mean it's not a way that you have to do things. It's just the way I do things. What I would do is, it's kind of hard to explain, but like, just say you have $10,000. And that $10,000 you have set aside to invest, right? That $10,000 I would put into my so-called Bitcoin bucket. So if I have $10,000 sitting there in the Bitcoin bucket, and my threshold hits right here, I will go to market and I'll buy 10% of that bucket. So if I got $10,000 in there and I buy 10%, I'm going to buy $1,000 worth of Bitcoin on that break. So I will be long the market with an exposure of $1,000 to Bitcoin, because I'm buying 10% of the amount that I have in that bucket. Now, if it goes up, like we just use this as an example here, it worked up to this point, kind of came back down, didn't hit the shallow fib, but when it came up to this point right here, it did dip down and it wicked below the shallow fib. My order probably would have been somewhere right around 47,100. I usually kind of go just above it or just below it, depending on which direction I'm going. And in this case, it was at 47,070. Probably had it at 47.1. So when this wicked down, you get filled at 47.1 for another 10%. So you're putting in another 1,000. So now you're long 20,000 or 20% or $2,000 out of that $10,000 bucket. And then you continue to go forward. And then once it got up to this point,
but you keep the rest in fiat, right? You have 10,000. Now you are invested 2,000. So you keep 8,000 in reserve in case you need to buy more, right?
Correct. Yeah. And once that fiat or that dry powder is put into Bitcoin, it never comes back to fiat. It will go into stacking sats instead. So if I do get out, it will be, it could be that I just move it to cold storage, or I move it to a long-term trade or something. Once it's in the system, it's going to stay in crypto. It doesn't come back to fiat for me personally.
So your reserve currency is Bitcoin.
Correct. Yeah. I mean, really, that's my goal. I mean, I kind of ease into it as over the years. But I mean, even when I do my budget with my wife, you know, just our household budget, I have everything denominated in Bitcoin. It's kind of interesting, but it helps me get a mindset of using that as my main currency, and so I measure my gains based on BTC, not really fiat, but that's another whole ball game and all of that. But really the 10% deal is just, if you have a bucket of money, I'm only taking 10% at a time based on that bucket of money. But the thing is I might have 10 different buckets, you know, Bitcoin, Ethereum, S&P 500, or, you know, you got all these little buckets of things that I like to trade. And then, you know, if I'm taking 10% out of this bucket and you have all of these buckets, it's less than 2% overall. So I know it gets kind of hard because you're looking at percentages all over the place, but the main gist is just, I like to take, it's just an easier way for me to think 10% at a time. And then once I get up to this point, I would have sold 10% and took profit, and then go on with the whole system. Or if it doesn't work, you get in and then all of a sudden it goes to the bear zone, and then it kind of clocks you out or stops you out, and then you take a loss. But the nice thing is this is trend following and it's swing trading. So if it didn't start a trend, you're out quickly, you take the small loss and ride the trends. That's basically what all technical analysis is all about, right? You want to cut your losses. Oh, that's more risk management, but cut your losses quick, but run your trends as far as you can until your system tells you to get out on that. So that's where we're kind of, I know I'm kind of rambling, but hopefully I answered the question.
Yep. We have a compliment here. Someone is saying that great stuff. As FiboSwanny said, always learning. I have learned a lot today. Thank you both. So people are really enjoying this live stream with FiboSwanny. And I guess we still have one more question here, and then probably we will start to wrap up. I assume those bull bear lines are different for each exchange? I guess not, because the people are the same, right?
No, they're different because based on the people that are trading on that exchange, they create their own patterns, I guess.
Oh, okay.
So whatever market you're trading, that's what you would want to do the bull and bull zone off of. So I mean, I use Coinbase as my base. I don't trade off of Coinbase. This is just more of a guide because I get a lot of people that do. So I use this as the kind of the proxy. But if you're trading off of like FTX or some other exchange, you would want to use that chart to form your bull and bear zone separately. So it is work, but I mean, that's one of the things I kind of do is I update a lot of charts for people and in my Patreon with chart requests and those kind of things. But I also share all my charts so it's live, so people can take it and run with it and use it. So that's what I'm kind of here for. I'm kind of wanting to share with others. I'm not trying to hide things. I'm just trying to, kind of help them.
Yeah, everyone can go to TradingView and follow your user, which, by the way, you are going to send me in those links so I can put it on the video notes.
Yep, I can do that.
Yeah, I've been following FiboSwanny for some time already, and I've been following him also on TradingView, so you guys can also check it out and see what he's doing. Okay, let's see if we have any more questions from the audience. I guess not. Nothing here. Oh, I was just going to say that my strategy is a bit different when it comes to charts, because I like to use the TradingView index of all exchanges together, which updates in real time, by the way. So I prefer to do my TA on that index. I don't know if you are aware of those of that chart.
No, I look at all those. I mean, if I go into my if I go into my my layouts here, I got hundreds and hundreds of charts.
Jesus,
so yeah, I look at them all.
You have many more than I do.
I could scroll that for like 10 minutes. But I'm glad there's a search bar, put it that way.
Yeah.
Yeah, no, I look at those too. But when it comes to using the threshold, whatever exchange I'm trading off of, that's what I'll chart. But if I'm looking at overall like traditional TA, then yeah, using those indexes are good. Like if you want to look for trend line breaks or patterns, like you were doing with the come and handle or any kind of traditional TA, I'll use other charts for those kind of things, because I'm a very traditional TA guy, because I learned a lot, because I passed the that CFTE exam, the Chartered Financial Technician, back in like 2015 or something like that. So I learned a lot about Dow theory and all of that, all the traditional TA stuff, which works really well, by the way, if you learn how to apply it. But it helps you find and measure patterns, and to where you can be a little bit more informative on pattern breaks and those kind of things. But I use those in other charts. So
okay,
when it comes to my threshold, I got to go with where I'm trading. So.
Okay, so I guess we don't have any more questions for the charts. We can stop the screen sharing. Let's go to the regular view now. I guess I just got one more question here.
Go for it.
And this is interesting for you, of course. So Nicolaus asking, if one joins Fibo Patreon, what will we get?
Basically access to my Telegram group, which is a great community, by the way.
I'm not there, man. I didn't know you have a Telegram group. I have to join that.
Yeah, that's with the Patreon, you get the Telegram group, and then access to the website. I have a website, FiboSwanny.com.
Okay.
All my charts and everything go on there, so I kind of keep updating charts, so people can kind of follow the bull and bear zones and how things are going on different charts. So that's pretty much what you get. But one of the things that's cool is we learn a lot in that community together. So it's everything Fibonacci based. I mean, you'll learn a lot that way. So that's really all you get. I come cheap. I'm not this person that tries to charge $1 million for everything. So I've been doing this for a few years now. I just want to keep it. I mean, I got to pay for my time, but I kind of keep it cheap so people can get in and get a really good information for not very many dollars, put it that way. Because it's $21 a month, and you get a lot of good information off of that.
21, sorry, I didn't get $21?
Yep. Okay. It's a fib number, 21.
Oh, okay, yeah.
But so I just kind of kept it at that, and the guys in the group and the gals, they been around for a long time, and they all stay with me. I think it's a great community. We learn from each other. I got guys in there now that are, coding some of the stuff that I do and try to get it that way and those kind of things. So there's a lot involved in the Telegram group. I like the community. I got about, I don't know, a couple hundred people in there now. So I kind of like keeping it small, but because I don't do this full time, so I try to give my time as much as I can. But if I ever decide to do it full time, I don't even think I would charge more. I think I would just kind of keep it as is and just build a community and learn from each other. Because one of my main things is I came up with something I feel like works pretty well, and it's a tool people can use. So I want people to like take it and run with it and break it apart and learn from it and build from it, because it's kind of cool if someone can take something that you build and make it even better into the future. So when I'm dead and gone, I hope people are still taking the fib theory and running with it. That's what I think is cool is about it. So
okay, that's great.
Maybe somebody comes up with something that, fib theory 2.0, and it just kicks ass even more than what this one does, that kind of thing. So that's the goal.
Okay, just one or two more questions from my side, which I was curious about to ask you. What do you think about Plan B's stock to flow model and his prediction of around 300K for the top of this cycle?
I like it. I mean, Plan B is smart. It's an interesting model.
It's been right so far.
Yes, that's what I'm saying. Like, until he's wrong, I mean, why can't? I mean, you got to kind of keep it in the back of your head that, you know, anything's possible in these markets. The first thing that you should learn in a market is to never say never, and to never say always. You know, because like, things just happen. I mean, it's just, some things just pop up. So when it comes from that model that he has, I think it's a pretty cool model, and I will follow it until it's wrong. But that means I won't ever follow him again, because all models are going to be wrong eventually. But it's how a person adapts to what's wrong with it and readjusts it for the future, so it works better even going forward. So, exactly. But for now, I mean, if it follows the way it should, and that model's looking good, I don't see any reason why you can't get to that cycle top before it turns. It's just that my stuff doesn't reach that high, based on the stuff that I do, but who's to say that it can't go to 300K, you know?
Okay, one last question.
I hope it does.
Yeah, me too.
I hope it does.
I hope he's right.
Exactly. Come on, Plan B. Let's do it.
Yeah, just one last question. What would be your exit strategy as soon as we realize that we have a blow off top and we could go into a bear market for some time?
Well, my knowledge is going to be based on when it hits the bear zone. So if we keep continuing up on this daily, you know, and it stays in the bull zone, and it's up at 100,000, it's up at 200,000, and it never breaks into the bear zone. Yeah,
but then the 38 will be a big difference from the top, right? Because as the top continues to go higher, then the 38% line of your the 38 is where you buy again, right? But if you go below it, even to the bear market RSI, then it will be a big difference from the top, I guess.
Yeah. I mean, I'm not a person that tries to pick a top or pick a bottom, because I think you can go mad trying to do that.
Yeah.
So for me, if it gets to 150,000 and it drops back down and it goes into the bear zone, and we're at 130,000, and I get out, yeah, it sucks that I didn't get the other 20,000. But if I stick to plan, I'm still making good profit. And I don't want to get greedy, those kind of things. But if we had like a $50,000 or $100,000, you know, wick or something, I might, you know, start easing off a little bit. But
yeah.
when it comes to just the patterns itself, I'll just follow the plan and let the plan dictate what I do, because the whole goal for me is to get as much emotion out of it as possible. Because once you start bringing in emotion, then you start doing things you shouldn't do, and
exactly
those kind of things. So that's one of the things that I tried to build this for, is to keep my emotions out of it. So if it does shoot up really high, should I be getting out? I don't know. Emotions would say, yeah, maybe I should. And then it dips down, and then next thing, you're up another 20% that you missed out on. But if you would have stuck to plan, then you're still getting the 20%. So I'm more along the lines of, I'd rather capture the 2/3 of the entire trend and miss the 1/3 top and bottom. I know that sounds weird, but that's just the way I kind of.
Yeah, but that's a really important message you gave us there. Stick to your plan. That's the most important thing. If you stick to your plan and you forget the emotions, you will always make some money, some profit, even if it's not the maximum you can do, but you will still be positive after all. So that's the main message.
Yeah. And the thing is it's survival. If you're trading a market, you want money to trade tomorrow.
Yeah.
So to me, I don't want to do anything emotionally stupid, and the next thing you know, I'm in the toilet and I don't have any money left. To me, I'm a lot more conservative. So it's just one way of doing it. I mean, everybody has different risk tolerance, but my risk tolerance is I'd rather miss the top little bit and still make profit.
Exactly.
Because then I live to look at a chart another day.
Okay, we'll start to wrap up here. So I'm going to ask you something, as we discussed before. As you guys know, we have a giveaway every week during the Saturday live stream, which is supposed to be the biggest one during the week. But as today was a special live stream, it's also already 1 hour and 30 minutes roughly. But in any case, for tomorrow, these people watching the live stream now want a number that is missing for the sum up. And I guess I will ask you to give that number now.
1929.
Okay, 1929, that's a good number. So you guys know it already. That's the number. That's the final number of this week for the giveaway tomorrow. Don't forget, tomorrow the live stream starts at 4 p.m. And of course, I will start to wrap up here. I guess there are no more questions. I would like to thank you, FiboSwanny, very, very much for accepting the invitation to come here today and give us his wisdom about Fibonacci's and his strategy on the market. And of course, I hope to have you again soon, and whenever you can, you know you are always very welcome here.
All right, thank you so much for having me. It was good times.
Okay, guys, so I hope to see FiboSwanny again soon, and I will say goodbye now, and thank you very much for your appearance here on the FU Money podcast. Thanks, man.
All right.
And I'll talk to you soon.
All right, you bet.
Okay, guys, and that was the live stream with FiboSwanny as promised a few days ago. This was a really interesting podcast today. We learned a lot. I learned a lot from FiboSwanny and his strategy in the markets. And of course, before I go and we end the stream, I will just make this so many things today here in front of me. I don't even know which mouse I should get. Okay, for the usual messages, if you like the streams of the FU Money podcast, you should follow us on Twitter. You know already that for you to be eligible for the giveaway of $100 every Saturday, you need to follow these Twitter accounts and join the Telegram group, which are now on screen here. The first one on top is my personal Twitter. The second one is the channel's Twitter. And the third is the Telegram group, where you can join more than 500 people and discuss Bitcoin and the markets in general 24 hours a day. It was a pleasure to be here today with FiboSwanny, and he's so experienced in the markets, and I really enjoyed today to have him here. Of course, don't forget that I will add the notes to this video. So if you want to follow the links, you should come back. As soon as I get them from FiboSwanny, I will post them there in the video notes, and you will be able to follow his links, the Patreon, the webinars, and his website. All that stuff will be there. So don't forget. Of course, if you enjoyed this live stream today, gently touch the like button. As usual, subscribe to the channel. And don't forget the notification bell so you get notified every time I start a live stream or I upload a video. And for today, this is all. I hope you enjoyed, and you will gently touch the like button. And I will see you tomorrow for the biggest live stream of the week and for the $100 giveaway in Bitcoin. Okay, guys, until then, I'll see you.